Ever wondered how to read a candle chart in the Indian stock market? It's a question that has puzzled many, but today we're going to unravel the mystery. Let's kick things off by understanding the concept of candle charts. Originating from Japan, candle charts have become a key tool in financial markets worldwide, including right here in India. They provide a visual representation of price movements during a specific period, helping traders make informed decisions. But what exactly does a candle chart show? It's quite simple, really. A candle chart displays four crucial pieces of information: the opening price, the highest price, the lowest price, and the closing price for a specific period. This combination of data gives traders a comprehensive view of market trends and potential shifts in momentum. Now that we know what a candle chart is, we move on to understanding its components. A candlestick chart is made up of individual candles. But what does each candle represent? Each candle in a candlestick chart is a visual representation of four crucial pieces of data within a set period: the opening price, the closing price, the highest price, and the lowest price. This information is displayed through two main components of a candle: the body and the shadows, also known as wicks. The body of the candle represents the range between the opening and closing prices. If the body is filled, it shows that the closing price was lower than the opening price, indicating a bearish or selling pressure. On the contrary, if the body is empty or green, it signifies that the closing price was higher than the opening price, suggesting a bullish or buying pressure. The shadows extend from the body, marking the highest and lowest prices during the period. With the basics of a candle's components clear, we can now delve into how to read a candle chart. Reading a candle chart might seem complex at first, but it's quite straightforward once you understand the basics. First, let's tackle how to read a single candle. A candle consists of two main parts: the body, which represents the range between the opening and closing prices, and the wick or shadow, indicating the highest and lowest prices traded during a set period. The top of the body marks the opening price for a bearish candle and the closing price for a bullish one. Conversely, the bottom of the body marks the closing price for a bearish candle and the opening price for a bullish one. Now let's talk color. A green or white candle indicates that the closing price was higher than the opening price, signifying a bullish market. Conversely, a red or black candle means the closing price was lower, signifying a bearish market. The color of the candle is a quick way to get a sense of the market's mood. Once you've mastered reading a single candle, you can start interpreting multiple candles together to identify trends. For instance, if you see a succession of green candles, it likely indicates an upward trend. On the other hand, a series of red candles could signal a downward trend. Beyond the basic trends, you can also identify common patterns in candle charts. For example, a doji is a candle where the opening and closing prices are virtually the same, indicating uncertainty in the market. A hammer is a candle with a small body and a long lower wick, often signaling a potential bullish reversal. An engulfing pattern, on the other hand, consists of a small candle followed by a large candle of the opposite color, indicating a potential reversal in the market trend. Each of these patterns provides clues about the market's direction, but they are most effective when used in conjunction with other indicators. Remember, interpreting candle charts is as much an art as it is a science. Reading a candle chart thus provides valuable insights into market trends and potential reversals. Candle charts, with their wealth of information, are indeed a powerful tool for stock traders. Let's recap what we've learned today. A candle chart consists of three main components: the body and the upper and lower shadows, each telling its own story about the market's behavior. Reading a single candle can provide insights into the opening and closing prices, as well as the highs and lows of a particular trading period. But the real magic happens when you start looking at a group of candles. Patterns begin to emerge, painting a picture of market trends and potential future movements. This invaluable information can serve as a guide for making informed trading decisions. Whether you're identifying bullish or bearish trends, spotting potential reversals, or simply gauging market sentiment, the candle chart is your trusty companion. Mastering candle charts can give you an edge in the stock market. So keep practicing and happy trading.